Good day, fellow investors. We haven't had a recession since 2009 in the US and since 2012 in Europe. If we look at the gross domestic product for the United States, the last dip, the Great Recession, ended in Q1 2009, and since then it was nothing but up, up, and up. And I'm not going to count the pandemic because that is not economically related, and you can see that since 2009 now will be 15 years of no recessions, and historically since the 1950s, 40s, but also earlier, it has never happened. There were some longer gaps, 10 years, but usually a recession happened every few years, and now suddenly we don't have any recessions anymore. Now the key questions are why we don't have any recessions. Will there be a future recession? Is it such a bad thing for a recession to happen? And then, of course, to conclude how to invest in the current environment based on the analysis we'll do now. Let's immediately start with why we don't have any recessions anymore. And that is because of central bankers. First, we have had 12 years of zero interest rates that stimulated the economy, allowed for the economy to grow. Now interest rates went up to 5.5%, but the economy is still doing good because of the huge money printing that has been injected during the pandemic and earlier, and there is still 1 trillion of excess savings to be spent. But that's not all. Despite the high interest rates, the US government and all other governments are still spending much more than what they are making. And 2023, there was a 1.7 trillion deficit that, of course, aided economic growth and GDP. All in all, the government incurred in huge amounts of debt over the last 30 years to keep things as they are, hopefully remaining like that. Good European indicators are the same. Government deficits are run at 3.6%. And then we also have how we measure economic growth and inflation. Because United States nominal GDP growth was reported at 5.7% in 2023, which is, if you include just all the prices and how much more activity there was. Then, if you adjust for inflation, you get real GDP. And the real GDP rate was 3.3% in the last quarter. So we have 3.3%, 3% of inflation, and that is how they calculate growth. But of course, we can debate whether inflation calculation is right, or there could be some other methods that would show different things. So the inflation index is very controversial, because it's based on the consumer price index, and that has changed over time because usually it was a basket of goods, and now it is the cost of maintaining a constant standard of living that changed over time, of course, which leads to different inflation levels. And just an example here, that in 2006, inflation was 2.2%. However, others, in this case Williams and Ranson, estimated 5.3% and 8.2%. Similarly, 2022, Williams' alternate inflation measure showed 16% and not peaking at just 9%. Shadow stats, you can read that, usually show what would be current inflation at historical levels, and you can see here the 200-300 basis points discrepancy there. So there are these financial economics, monetary policy impacts, government fiscal, that make it look like there is no recession. But it is what it is. But what is more important is, will there be a next recession, and of course when? If we look at recession predictors, there is the jobless unemployment rate, and that's pretty standard. When it starts ticking up, then it is likely that a recession will be there. But this is a very short-term indicator, and you already know you are likely in a recession when that happens. The other predictor is the inverted yield curve. If we look at the yields on the US Treasury from 3 months to 30 years, this is the normal yield curve, short term, and then it steepens towards longer term, where if you give money to the US government, the longer term you give it, the higher is the interest rates you want to expect. However, before recessions, because investors expect that if we're going into a recession, the Fed will have to lower rates, and therefore they want to lock in those long-term higher rates, that inverts the yield curve, which is the current situation actually over the last 2 years. So we get 5.3% on treasury bills and then down to 4% for 30 years, where investors expect, let's say, the yield curve to return to some normalcy and here make the gain on those long-term changes. And if we look at how the yield curve predicted inflations in the past, it was a pretty prescient predictor. And if you look at it now going below zero, thus inverted, the logical conclusion is that a recession will happen in the next 12 months. Of course, we will see whether it will happen or not, but the question is a recession happening as everyone is doing everything possible to prevent a recession? Is a recession really something that bad? And if we look at unemployment, Great Recession, the unemployment rate went from 3.5 to close to 9. In 2000, there wasn't such a big hit, but it almost doubled 1990s, and here it was really ugly from 3% to 9% over 4 recessions in 15 years. And I think 9 million Americans lost their job during the Great Recession. So that is something definitely one wants to avoid. But when a recession comes, everything goes down. That's what and why everyone is trying to avoid one. If we look at markets, those went 50% down during the last 2 recessions, and we will see whether those will go again 50% down. Perhaps not, because the Fed and the government are now doing anything in their power to prevent future recessions. So, will the Fed and the government save us again? It is very possible, but there is a limit to the money printing and the debt issuing. When it doesn't work anymore, then is where the real issues arise. For the last 15 years, it worked, but at some point, given history, it will not work. And this is the standard long-term debt cycle representation, and we have been now leveraging for more than 50 years, enjoying huge growth above the productivity growth level, and we are somewhere towards the last innings of the long-term debt cycle, which means that a depression is ahead. Of course, I cannot tell you whether tomorrow or in 10, 15, 20 years, but that is the ugliness of it. And that's likely what everyone tries to prevent, because they are afraid of this future recession spiraling into a depression being really big. Perhaps it would be better that we had 4 recessions in the last 15 years, and then we would not be that afraid of the next big depression, recession coming forward. I've read a little bit about that on Ray Dalio's blog, Where Are We in the Big Cycle? And he says that we are on the brink of a period of great disorder. More short-term oriented 2024, he is more looking into political situations that also, if we look at his key focus, that wealth and political gaps, wars, nature, and tech, the debt situation seems stable for now, but he says that the government debts will eventually be unsustainable and crisis causing if not rectified. And therefore, maybe they can save us for another decade of recessions, but as long as they push that crisis forward by borrowing money, by printing money, means that the next recession will be uglier and uglier. And that is what everyone is afraid of, the negative spiral. So when the trust is lost, first markets go down. If markets go down, spending, pensions, everything goes down, selling, investing, new houses, cash flows also go down, the currency goes down as everyone is selling those inflated assets and changing the currency, something that we will discuss also when Ray Dalio discusses it in his posts. Excessive government spending and debt creation accommodated by central bank policies that keep real interest rates low and money and credit plentiful, it will in the long run create big financial problems, but that's a topic for another time. So we have this short-term safety, or let's say more political, geopolitical uncertainty going forward into this year 2024, but the underlying fundamentals are terrible and unsustainable, which is also my big issue. I don't know whether a recession, depression will get here this year or hopefully in 12 years. I hope in 12 years. And if you don't invest like everyone else now, and the depression comes in 12 years, you will look an idiot for 12 years and then look okay for that few years of depressions because you invested differently. I always invest depending on price. Whether a recession will come next year or not, impossible to predict. But I can see what is the risk and reward depending on the price of something and then invest in it or not. And then if the price is right, then even if there is a recession, I can weather it out if I bought at the right price. That's the first strategy. And the second strategy is having strong personal strength. I'm looking, I don't know, my parents, if there is a recession, depression, they will lower their income, they have no debt, they will survive it, they will weather it, they will keep working likely their jobs, the pension for my father will keep coming, maybe smaller, but they will be able to survive it and weather it. And this is perhaps the key also for us investors. Are we ready? If a big shock comes, just be ready to do more, invest more, take advantage of the opportunities there. My line of business, YouTube, research platform, should increase in demand as other things go wrong. So I am somehow covered there, but you also have to see personally, can you withstand this depression that will sooner or later come? Whether a recession will be mild, soft landing, hard landing next year, it is actually impossible to predict, but we can look at the fundamentals and then adjust accordingly. Thanks for watching. I'll see you in the next video.